Crypto miner Phoenix Group's shares surged 35% in Abu Dhabi stock market debut. In November, the UAE-based company said its initial public offering was 33 times oversubscribed. Shares of cryptocurrency miner Phoenix Group rose 35% to 2.03 dirhams on Tuesday, their first day of trading on the Abu Dhabi Securities Exchange. The shares, which sold for 1.50 dirhams in the UAE-based company's 1.36 billion dirham initial public offering in November, rose as much as 50% to touch 2.25 dirhams during the day. The share sale was 33 times oversubscribed, it said at the time. Phoenix Group offers mining through hosting services and a cloud-based service whereby clients rent hash rate. The company also runs a cryptocurrency exchange called M2, powered by its native Ethereum-based token, MMX. International Holding Company, which is chaired by Tahnoon bin Zayed Al Nahyan, brother of UAE President and Abu Dhabi ruler Mohammed bin Zayed Al Nahyan, acquired a 10% stake in Phoenix Group in early October. Bitcoin ETFs got BTC surging, but tumbling interest rates have helped, too. The abrupt recent turn in expectations for Federal Reserve monetary policy has helped asset prices across the board. While Bitcoin ETFs have frequently been cited for sparking the huge, recent BTC price rally, dramatically lower interest rates are helping, too. This has Bitcoin prices in a place they haven't been in about 2 years, soaring breathlessly, with some calling for continued gains. For months, conventional wisdom has been that Bitcoin's sharp rally, which took its price from $27,000 in early October to above $43,000, was caused by investors enthusiastically betting Bitcoin ETFs will soon get approved in the US. And while evidence piles up that those ETFs will get blessed by regulators, something else appears to be at work. Interest rates have plunged in key bond markets, signaling optimism that central banks might soon not just put an end to rate hike cycles, but begin to ease monetary policy. For instance, yields on 10-year U.S. Treasuries are down 8 basis points on Tuesday to 4.18%, leaving them down almost 90 basis points since hitting a 16-year high above 5% in October. The 2-year Treasury yield is at 4.6%, down more than 50 basis points from the start of that month. The big drops came as market participants began to price in an end to the U.S. Federal Reserve's 18-month run of tighter monetary policy. Traders didn't stop at that, though, short-term rate markets now anticipating that the Fed will start cutting rates as soon as the first quarter of 2024. There's now about a 2/3 chance of one or more 25 basis point Fed rate cuts by March 2024, according to the CME FedWatch tool, which draws its data from those short-term rate markets. Going out to May, markets have priced in just shy of a 90% chance of one or more rate cuts, including about a 5% chance of 3 rate cuts by that time. To the extent that sharply tighter monetary policy throughout 2022 was a factor in Bitcoin's major bear market that year. Now entrenched expectations of easier policy in 2024 are surely playing a role in this bull move. And it's not just Bitcoin. Read more. US CPI unexpectedly flat in October, Bitcoin adds nearly 1%. The 180-degree turn in the rate outlook is lifting assets across the board. In addition to the big rally in the bond market, the stock market in November had its 18th best monthly performance since 1950. According to Carson Group's Ryan Dietrich, returning 8.9% over those 30 days. Gold, oft mentioned in the same breath as Bitcoin for its properties as a hedge against easy central bank monetary policy, has been on the move as well, rising more than 10% since the start of October, and touching a new all-time high above $2,100 per ounce earlier this week. So, it seems prospective Bitcoin ETFs and rates optimism have Bitcoin in a place it hasn't been in about 2 years, soaring breathlessly and with many hopeful for continued gains. IBM introduces new cold storage tech for crypto assets. The new offline signing orchestrator tech is being used by IBM's long-standing partner in the crypto space, Ripple-owned custody firm BITCON. IBM has released a cryptographic signing technology for handling digital assets in cold storage, reducing the risk associated with manual procedures while keeping assets at arm's length from an internet connection. The tech giant, often called the Big Blue, said in a statement on Tuesday that its IBM Hyper Protect offline signing orchestrator helps protect high-value transactions by offering additional security layers, including disconnected network operations, time-based security, and electronic transaction approval by multiple stakeholders. In recent years, IBM has quietly been applying its gravitas in key management, specifically its confidential computing suite of technologies, to digital assets and cryptocurrencies. The limitations of cold storage come down to human interactions, which can take the form of inside jobs, forced attacks, when violence is threatened to have a transaction signed, or other operational errors involving administrators at data centers and simple, pen-and-paper, approaches, IBM said. The new OSO tech is being used by IBM's long-standing partner in the crypto space, Ripple-owned custody firm BITCON. Bitcoin blasts to $44,000 on Coinbase, could run towards $48,000 resistance, LMAX analyst. The sharp move higher from $42,000 Tuesday prompted $73 million in liquidations, mostly from leveraged positions betting on lower prices. A quick surge in Bitcoin early Tuesday afternoon lifted the price above $44,000 on some crypto exchanges, including Coinbase. For the first time since early April 2022, as the largest crypto extended its rally supported by declining interest rates and anticipation for a spot Bitcoin exchange-traded fund in the U.S. The CoinDesk Bitcoin Index XBX, which gathers pricing data from multiple exchanges, rose from below $42,000 earlier in the day to hit a session high of $43,868. It's shed some of the gain since, retreating to around $43,500, still up nearly 5% over the past 24 hours. The volatile action liquidated $73 million of leveraged Bitcoin derivatives trading positions, predominantly shorts betting on lower prices, Glassnode data shows. The Bitcoin rally is supported by a confluence of growing institutional investor interest and anticipation of an imminent regulatory approval for listing spot-based BTC ETFs in the U.S. Simplifying access to the asset for traditional players, Joel Kruger, market strategist at LMAX Group, said in an email. Kruger said BTC's upward price momentum has a clear path ahead until the area between $48,000 and $53,000, based on technical price levels, notably highs hit in March 2022 and September 2021. Elon Musk-backed X.AI files with SEC to raise up to $1 billion in equity offering. The filing says the company has already sold $134.7 million of the securities. X.AI Corp., backed by Tesla CEO and ex-owner Elon Musk, is raising up to $1 billion in equity securities offering, according to a regulatory filing. The company has already sold $134.7 million of the securities, with another $865.3 million remaining to be sold, according to a filing made with the U.S. Securities and Exchange Commission. The minimum investment accepted from any outside investor is $2 million. The filing says that Musk, who took over Twitter and renamed it X, is an executive officer and director of X.AI. Also listed as an executive is Jared Burkle, a former Goldman Sachs, Merrill Lynch and Morgan Stanley executive who is reported to be the manager of Elon Musk's family office. CoinDesk previously reported that in April 2023, when Musk merged Twitter into X Corp., he also registered X.AI as an artificial intelligence startup. The executive then established XAI, his own company, to understand the universe. The announcement prompted some crypto users to spin up scores of X tokens on multiple blockchains. Elon Musk, artificial intelligence and crypto. Musk is closely followed in the crypto industry since Tesla was one of the first big corporate buyers of Bitcoin and since X is such a prominent venue for information exchange among blockchain companies. That's all, subscribe to the channel and see you soon.